Hello, all you awesome, avid podcast listeners. Thanks for tuning in to the NetSuite podcast. I'm your host, Kendall Fisher, and on this episode, we're joined by Carrie Augustine, CPA and Oracle NetSuite software industry principal, who helps us better understand the new standards surrounding lease accounting with ASC 842. She covers everything you'll need to know about the standards, including what to expect and how it will change accounting processes and financial statements moving forward. Augustine explains how NetSuite can help companies manage the new leases and provides her biggest piece of advice for companies as the new standards come into play. All of that and more coming up next.
You're listening to the NetSuite podcast, where we discuss what's happening within NetSuite, why we're doing it, and where we're heading in the future. We'll dive into the details about the software and the people at NetSuite who are behind all the moving parts. We'll also feature customer growth stories, discussing the ups and downs of running a company and how one integrated system can help your business continue to scale.
Before we get into this episode about lease accounting, we want to thank our sponsors over at Blue Microphones. Everyone has a story to tell, and if you're a storyteller, you probably know Blue Mics for their iconic Yeti microphone, which has helped millions of people find and amplify their voices. If you're thinking about creating your own podcast, maybe recording some voiceovers, gaming, reading audiobooks, or what have you, then you need to check out Blue's new Yeticaster, the complete mic and boom arm system ready to connect to your laptop, bringing the ultimate broadcast studio setup to your home or office. That's what we use here at the NetSuite Studios. To get your hands on one of these setups, visit bluedesigns.com and use code PODCAST at checkout for a special price. Hi, Carrie. Thank you so much for joining us on this episode of the NetSuite podcast.
Hi, thanks so much for having me.
Of course, we're happy to have you diving into this topic, lease accounting. I briefed our listeners a bit about what we're going to dive into and let them know your background as well as a CPA and now the software industry principal for NetSuite. But before we really dive into it, can you actually tell our listeners a bit about how your history in accounting prepared you for this role and what you're doing now? Like, how did that background as a CPA and in accounting prepare you to help software companies?
Yeah, sure. So I started off my career in Big Four public accounting, and I actually audited, software companies, and I focused on more technical topics. Actually, part of what I did as an auditor is I audited companies' lease criteria that they went through. So
got it.
Yeah. So that's my background. And the software company I worked at, we experienced a lot that folks in the software industry experience. So growing fast, expanding internationally. And then I was a part of taking the company public.
Oh, wow.
So through the growth and, just preparing for the public offering, I spent a lot of time streamlining processes and putting controls in place. So really through this type of work, I was able to identify how important it was not only to have good processes, but also to have a good accounting system to support those processes.
Yeah, very interesting. Well, I guess then, since you already mentioned it, we might as well dive into lease accounting, because some of our listeners might even not actually know what that is, just to put it out there in case for any of those listeners that are like, I really don't know what she's talking about. So can you explain what lease accounting is?
Yeah, of course. Yeah, so accounting for leases, really in the past, a company had been required to run through a whole, slew of tests to determine if it should be counted for as an operational lease or a capital lease. And really the theory behind this, the tests were really to represent the nature of the transaction that was occurring. And so I'll kind of get into this in a little bit more with a real life scenario. So for those of you who may have leased a car, the idea of you leasing a car may be for you to lease the car and then at the end of the term, buy that car back. So really you would kind of consider this your car, right? With that intention. But if you were leasing a car with no intention of, buying the car at the end of the term, so maybe it's for like a short period, maybe 2 years, you wouldn't really worry in that case about negotiating a favorable buyback term So you're just really using the car. So
Okay.
the intention in the first scenario is for you to, keep the car after you've finished your lease. And the intention in the second scenario that I talked about is really just, the use of a car for a 2-year short window period. So, kind of taking this back to the leasing standards, in terms of relating this, in the case where I have a car for 2 years, that would be considered operational.
Okay.
But in the case where I would have the car and I would intend to buy it at the end, that would really represent more a capital lease. So again, it's kind of, I'm oversimplifying this, but really the concept is to get to the substance or the structure of what the intention is, versus just looking at, a lease document.
Okay. And this is what are both these capital leases as well as operational leases. Is that what we're seeing within companies as well?
Yeah, absolutely. So a part of this change, though, under 842 or IFRS 15, under the old standards, you would kind of go through a slew of criteria. And so the first criteria would be, is there a transfer of ownership at the end of the lease term?
Okay.
And then the second would be, is there an option to purchase the asset at the end of the term? And the third is the term of the lease greater than 75% of the useful assets? And then the fourth criteria would be, is the present value of the lease payments greater than 90% of the fair market value? So if all these things were considered true, it would really be accounted for as an asset. So you would create an asset on the books, and it would also be, a debt, so a liability for that particular asset. So
Okay.
this is really the old standards and going through this criteria to determine whether it was capital or operating. When going through this criteria, for the most part, a lot of times leases fell into the category of operational.
Okay.
That was most common. Certainly, companies did capitalize leases, but for the most part, under the old rules, ASC 840, they were really, the majority were considered operational. But under 842, there's new criteria. So generally leases, greater than 12 months should be accounted for as capital leases.
Got it.
So that's really kind of where the changes are coming into effect for companies.
Kind of big change. I mean, if you think about it, you're in an office for however long you're in that office building. I mean,
Yeah.
we within NetSuite have been in our offices for several years, although the Los Angeles hub, if you will, just moved. But we're typically,
Yeah.
we're in there for a long period of time. So most offices, you're not going to be in there for less than 12 months. So if you have a printer,
Yeah.
for example,
Yeah.
that printer becomes capital after 12 months.
So if the lease is greater than 12 months, that sort of is a criteria that typically that lease would be considered a capital lease and recognized as an asset and then depreciated. So in the past, some folks, if they had a lease for maybe, let's say, 24 months and it didn't meet any of the other criteria that I mentioned, they would just consider that an operating lease. So what that would look like, when they were recording the payments to the leaseor, what that would look like, it would just be an operational expense. And they would have never accounted for the asset or accounted for the liability up front. So it's going to have pretty big impacts to the balance sheet.
So why right now? What's going on at a higher level
Yeah.
that instigated these new standards, ASC 842 and IFRS 15?
So just as with ASC 606, which has, had a pretty significant impact on companies, the intention is to align the accounting standards globally. So just like I said with 606, so it's a joint venture between the FASB and the International Accounting Standards Board. There are some slight differences between 842 and 15, just as there's slight differences between ASC 606 and IFRS 15. But the idea and the intention is to, align these standards in a way that if I'm looking at a software company's if I'm looking at their financials in the US, those financials are very comparable to a company in the UK, and they're not going to have big glaring differences. So this is one of the differences that, that was previously in place between the two standards. And so now we're just sort of aligning those standards.
So we were seeing massive differences in the way in our lease accounting in the United States as compared to other countries.
Yeah.
Okay.
Yeah.
Is it because they have this, is this standard in place for them? Like other countries right now, is it pretty much there and we're kind of hopping on board with them?
Yeah. Internationally, the standard setting community has done a much better job of being able to identify what the market value or the present value of transactions are and recording. So that is one of the other things that is a part of this new standard is, identifying the present value of that asset. So yes, previously in the international standards, they have always sought to, record transactions and record the nature of those transactions at fair market value. So
what changes should companies then expect with these new leasing standards?
I mentioned this earlier, but it's worth kind of stating again. So because these assets are now going to be a part of a balance sheet that weren't there previously, so you'll see an increase in the fixed asset balance. Okay. You'll also see an increase in the lease liability. So that will be a new balance that, if an asset previously hadn't been recorded as a capital asset yet, it was an operational asset, that would be an increase to the fixed asset and liability. And then also an increase to interest expense, because the difference in the payments are going to be, recorded as interest expense.
So I'm hearing a lot of things that are going to basically change, a company's process for accounting, but can you dive into that a little bit?
Yeah, absolutely. So one of the things from an accounting standpoint, of course, the adoption will require attention of accounting teams. And I can tell you, being on, the ground floor, talking to accounting teams day in and day out, folks are already pretty tired from the 606 standard. So this will be yet another adoption that needs to take place, and accounting teams will need to evaluate and identify which leases should now be capitalized and understand the net present value at the time that they should begin capitalizing those leases. And then also what will need to be set up is the corresponding schedules. So any sort of lease schedules that will need to be used to, create the liability, and then the monthly schedules going forward for each interest expense and liability, and how those payments will look from a leasing standpoint. So yeah, it's a pretty significant standpoint. So it's the adoption, as well as, creating those lease schedules, maybe in Excel, and then having an idea of what the monthly adjustments will be to interest expense.
Oh man.
Yeah.
A lot. That's a lot.
Yeah.
Do you foresee companies manually doing this, like in Excel, or do you think that you'll see them implementing these or operationalizing these new standards in a system? What do you foresee happening?
Yeah, I would say, folks that have anywhere from like 1 to 10 leases, it might be manageable in Excel, but
might.
Yeah, I know. When I was a controller, I would, look to get everything out of Excel. So I say that with a caveat, might, because some people might have a greater tolerance for the Excel pain than I do.
Yes.
But I would say generally anybody that has over 10 leases, they're going to want to operationalize that. So they're going to want to take those lease schedules that are sitting in Excel and used to make those monthly adjustments. They're going to want to take that and actually put it into a system so that those adjustments can be made automatically at the closure of your books.
Is NetSuite doing this? Is NetSuite able to manage these changes and to help manage these various leases?
Yeah, absolutely. So Within our fixed asset capabilities, we have lease management functionality. So every month, based on the schedule that's set up, not only will NetSuite record that depreciation, but we'll also decrease the lease liability based on the payment schedule, and then record the interest expense as well. And so the most important thing to sort of take away here in terms of the schedules is sometimes when you think of an amortization schedule, you just think, here's $10,000 and it's going to hit the GL every single month. But with the leasing standards, it's not that simple.
Why?
Because it's based on the present value. So if you think about like your mortgage, your mortgage is going to have, the first payment that you ever make on your mortgage, that the interest is going to be much greater than the interest on your last payment on your mortgage.
Right.
And so the interest, the cascading sort of interest, adjustments that need to be made are going to be different every single month. And so within the system, you're going to want to have, the ability to set up that schedule so that the interest, as it changes month over month, is going to appropriately, record the interest expense and also decrease your liability as that schedule moves out into the future.
Want to help save the planet? Here's an idea. Go nude. Unfortunately, not wearing clothes isn't realistic for most of us, but buying sustainable clothing is. Here's Gordon Seabury, CEO of Toad & Co.
Few know that garment production can generate tremendous pollution. So that's why we're hellbent on offering cleaner, sustainably made clothing that's stylish and long-lasting. But that's only half the battle at Toad & Co. When it comes to hitting our business goals, we've learned to focus on what we're good at and seek partners for other areas of expertise. So when it came to ensuring a consistent customer experience across all sales channels and knowing what was going on with all aspects of our business, we chose NetSuite by Oracle. They know business systems, we know eco-friendly clothes. A perfect match.
From accounting and finance to commerce and human resources, NetSuite is the #1 business system to help you simply manage your business. Right now, go to netsuite.com/toad to get your free guide, Crushing the 5 Barriers to Growth. That's netsuite.com/toad for your free guide and to hear Gordon bear all on Toad & Co.'s growth story.
Hey, we've talked a lot about examples in real life, but can you give us some examples of actual leases that could be impacted by these accounting changes within a growing company?
Yeah. So what you brought up earlier as printers, I'll kind of move to that example because that's that's something that's really tangible as well. And people can even if you have a printer at home, you can know how frustrating that printer can be to get it to work sometimes.
Yeah.
So just as, individuals have issues with printers, companies do as well. And that's absolutely something that, most companies will look to lease. And the reason why they look to lease it is because it's a little bit, more complex or technical in nature.
Right.
There needs to be ongoing maintenance. There's a lot of things that can go wrong, and owning a printer can, require a lot of work. So most times companies just say, well, printers are something that it's beyond our expertise. We're running a software company. We don't want to have to worry about printer management.
Right.
So we're going to go lease our printer. And that's an example of, equipment or something that, folks would look to lease versus buy. And of course, like you also mentioned earlier, real estate is another great example, but a printer, is also a great example of something that is, a machine, a tangible asset that might require something more than folks are willing to give in terms of dedication of time and effort.
So how will these new leasing standards, let's say for a company that's leasing 12 printers and they've been leasing these 12 printers for 5 years, let's just say. Mm-hmm. How will this change for them now? How does it affect budget? How does it affect pricing? How does it affect, the future? Because the reason I ask for that is because how can these growing companies who are having to face these new leasing standards prepare better for what they encounter with them?
Yeah. So I would say, first and foremost, we've talked a lot about the accounting and handling the accounting. But one of the things that will be impacted are things like ratios. So when you're moving an expense that was originally, perhaps originally recorded as an operational expense, and you're now moving that to depreciation, your ratios are going to change.
Right.
And so for folks like that have investors that are oftentimes, looking at ratios and have very, clear expectations of how those ratios should look month over month. Also banks, there's a lot of, in terms of, banks, when they, draw up agreements, they are really clear about how they expect companies to perform. So there's covenants that are included in, a bank agreement, and, meeting those covenants can potentially, be impacted with these new changes. So, that's first and foremost sort of externally outside of accounting. The second thing to bring up here is that with these new leases, you will be able to take the net present value of the lease at the time you're adopting the new standards. So what that looks like is, unlike 606, you would have to go back and restate previous years. Under 842, you can actually look to, the schedule that you have as of the date, and that will be what you're putting that asset and the liability on your books for. So there's not as much work in terms of going back and sort of reaccounting for transactions. So that's sort of the, I guess the bright side of the new standards.
Now, probably the most important thing to note is the when. When do these standards take effect? What should people be looking out for?
Yeah. So in terms of if you're a public company and you have a calendar year end, as of January 1st, 2019, that's when you should be accounting for the leases under the new standards. Now, if you're a private company and you have a calendar year end, that should be accounted for as of January 1, 2020.
Got it.
So, it's kind of coming up, of course, for public companies, the time is now. For private companies, they have some time, but I can tell you from my experience with 606, people cannot start this transition process and understanding how it will impact their books soon enough. Because it's not just operationalizing, like I mentioned, it's going back to your banks, going back to your investors and telling them, educating them on the changes and how it will impact a company's financials.
So how long should a company be preparing to make these changes? I mean, how long does that typically take?
I think it probably depends on, it really depends on how many leases that they have.
Yeah.
And it also depends on, if they have a system in place that can easily accommodate these leases. So in the example of NetSuite, we do have, like I mentioned before, we do have the capability to handle these leases and set up schedules in our fixed asset capabilities. So for folks out there that are using NetSuite, you can very easily accommodate them with our existing product. But for individuals that don't maybe have a nice system in place to support them, I imagine they would want to start earlier rather than later. And again, it probably depends on how many leases they have.
What would you say is the positive and negative that goes with these changes that we're seeing in lease accounting, just from an overall, a very high view that companies can prepare for?
Yeah, I would say that the biggest thing is that, unfortunately, this will require additional setup in terms of schedules within the system, but it also will require, more accounting attention, if you will, because under the old rules, like I mentioned, an operational lease was just as simple as making that payment to the leaseor, recording the payment and recording the expense. That's a really quick and easy entry to make as you're making that payment on a monthly basis. But for the new standards, when essentially you're capitalizing the majority of your leases, that's where you're going to have to do a lot more setup at the initiation of that lease. So I would say, unfortunately, it's going to require more time and attention from the accounting team.
Got it. Yeah. And how can a solution like NetSuite, help with the time and perhaps even the head count that it would take to manage something like this?
Well, I would say the important thing to note is that it's going to take a little bit of setup at the execution of that lease.
Yeah.
It will take a little bit of setup, but once you've set it up with NetSuite, you don't have to worry about going in and making those entries every single month as you would with maybe some other systems that can't easily accommodate it. So it's more of the idea of, setting it and forgetting it, because we all know the situations where you have new accountants come in and they didn't realize they were supposed to be making this entry, and the entry isn't made and it's caught, subsequent to closing the books. And so, the idea is, initially when that lease is executed, putting it in a system and not worrying about it after that. So not needing to have sort of that monthly recurring, entry that's manual.
Yeah, not to mention the human error that can also happen with that.
I have been
front
and center of seeing errors that have occurred based on somebody not making an entry that they didn't realize they had to make because somebody left or, So it unfortunately happens more than we want it to.
Yeah. Any other advice you'd provide for companies as these new standards come into play?
I would say, like we mentioned before, I just, sooner rather than later. Okay. You never know. Sometimes you don't realize how many leases you do have out there because you're just accounting for them, every single month as you're making payments to your leasor. So what that really looks like is, you don't have maybe the information or the data to be able to easily understand how many leases you have out there. So it might take a while to gather that to, come up with a reliable population of the leases. So I would say, starting sooner rather than later is important. And also knowing that, when you first start to comply with standards, putting in Excel to get your hands around it can be nice. But, always take the steps to operationalize that after you've sort of gotten your arms around, what needs to be recorded and when, putting that into the system as soon as possible. And, not needing, like we were talking about, to make those manual entries is, what I would absolutely recommend, because it, decreases the risk of error, and it really just kind of, allows you to, put the time and effort in up front and set it and forget it.
So systems like NetSuite
yes.
can help.
Yes, absolutely.
Well, thank you so much, Carrie, for joining us and diving into this topic. I know it's a hot button topic right now, so we really appreciate it.
Of course. Thank you.
I'll remind you one last time. Take into consideration the time you'll need to meet these new standards each month and whether a business management solution like NetSuite can help. Thank you so much to Carrie Augustine for joining us on this episode of the NetSuite podcast. We also want to thank our editors over at Lampstand and all you listeners for tuning in. Don't forget, rate, review, and subscribe. Catch you next time.
You just listened to the NetSuite podcast. Be sure to tune in every week with more NetSuite developments, stories, and insights into the benefits of one integrated system to help you run your business.